Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXAM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at dailyfx.com. So let's go ahead and pull up that report, and we can read the synopsis on top. The euro-dollar may remain confined to its 1,000-pip range for the next several days before a break to yet a new low. So let's read a little more about the euro-dollar. The nature of price action since last week's low strongly suggests that a triangle is unfolding as a fourth wave within a five-wave decline from 160.40. So I'm going to get a little more into that, into exactly what Jamie means once I do bring up the charts, and also the dollar-yen, as that's what we have been focusing on for the most part in my reports. The dollar-yen rally from 90.86 is probably wave A, the first wave in a three-leg upward correction, so that would be a counter-trend move. Support last night came in at the top side of the former resistance line. So let me go ahead and pull up the charts, as again, that's what we have been focusing on. Let me start. This is the Kiwi. We will get to that shortly. The first chart is the euro dollar. We can see the nice bounce off that 78.6 fib level, and now again. So Jamie's calling for a what this is right now is just the fourth wave triangle formation, which should be followed by a fifth wave to a new low, which will exceed that 123.30 low print down here. So moving forward, if you can get an entry, I like this long candle wick. This is the hourly chart here. I can change the style of the chart. I mean, if you can get an entry close above that 130.31 figure, I might like the trade. The only issue here is prices are a little far away for me to identify any clear good risk-to-reward trades. So what I would suggest is just keep an eye on Jamie's reports, see if any clear resistance levels do present themselves. So that being said, like this would be a clear resistance level up here, the high of this candle. So if you can get an entry close to that 131 figure, I realize that is a little over 200 pips away, but it's something we can keep on the radar screen over the next day or so. The next chart that I will bring up is the dollar yen, and as Jamie mentioned in his report, this is the resistance line that I've been using for the past, I would say, 8 or 9 reports. Those reports are located directly above this report if you're viewing this presentation in the Daily FX forum. And we can see, I was mentioning that I thought this line would eventually fail as it had been tested quite often. We can see that did occur. During yesterday's report, I mentioned that we might lighten up our positions if we had entered on the opposite side of this resistance line. And this is also a good example of former resistance acting as future support. So there were good, a few scalping trades, or even more than that, a good swing trades here off this technical level. And again, we don't have to be clairvoyant here in terms of trading. This is just a nice line that we can use to base our trades on, and most importantly, to our risk, where to place our stops. So as I was mentioning, I thought the line was going to break, and once it did, I also mentioned, prior to the break, that we can use this line as future support, and we can see that that has occurred a few times here. But now the same thing is happening as what happened when the line is acting as resistance, in that it's being tested quite often from the top side here. So I'd still maintain a slight bullish bias, but that my confidence in this line acting as support is weakening. So again, and we can keep an eye on Jamie's reports to see where the next levels are. As he mentioned in his report, if this line does fail, the next level of support is near that 96 figure. So now let's move ahead to the euro pound. As I also mentioned that yesterday, this is the daily chart, and there's a very long wick, and I can change the style. This candle right here, just in case you're viewing this on YouTube where the resolution won't be as good. This is the candle that I'm speaking about, and that's the candle that we might still have that slight bearish bias against. against the high of this candle again, which is 81.95. And the market did give us an opportunity to enter close to that high. The high of this candle here is what is this? 81.50. So that's no, excuse me, I have that incorrect. The high of that candle 81.63. So that's a good risk reward. If you can get an entry close to there, place your stop even just a few pips above the high of this candle, which again is 81.95. So now moving on to the Kiwi. And we can see yesterday I put up this support line, and we can see, and this is a very typical thing that will happen in trading. This is a support line I was using, and we had a clear bounce off that support line, but then prices did reverse and have now fallen beneath the line, and we can see another good example of once support is broken, acting as future resistance. So right now, I'd kind of take this off the table, and this pair, most importantly, because the SSI is favorable, I'm bullish on this pair as well, but we want to wait for that good risk to reward entry. And what I would suggest is keeping an eye on Jamie's reports, getting those clear support levels. Now that this support line has failed, there was a nice trade, and hopefully you were able to participate in it and take a sale up there. But unfortunately, maybe if you held on, you might have been stopped out on the close beneath the level. But again, these are short-term levels, so once your position is a little bit in the money, I would always recommend taking a little bit off the table. So now moving forward, now the fact that this short-term support line has been violated, I might suggest just putting up some fib levels, and let's see where those end up on the chart. And so now I might look for a move down, maybe to the 50% level, near the 57.38 area. And if not there, then the 61.8 at 56, just above the 156 figure. So that's something to keep on the radar moving forward. Again, my name is Matt Russell from the FX Power Course. Thanks for listening.